of the Middlesex County JIF to order. Notice of this meeting was given by sending sufficient notice herewith to the Home News Tribune, the Asbury Park Press, and the Jersey Journal. Filing advance written notice of this meeting with the clerk and or administrator of each member, and posting a copy of the meeting notice on the public bulletin board of all members. Direct the secretary to enter into the minutes of this meeting the advance written notice of this meeting and this statement. Can I get a roll call, please?
Yes, Frank Bellino.
Present.
Ricardo Lanos.
Present.
Jeanette Larison.
Here.
Harry Delgado.
Here.
Michael Drulis.
Here.
Joe Zanga.
Here.
Mayor Heck. Glenn Kurtz. Leon Sokol.
Here.
Scott Recant.
Here.
Joe Manzo. Donna Setzer.
Here.
James Gote. Sean Kelly.
Here.
Robin Rassiopi.
Here.
Karen Waters.
Here.
Sean Walsh.
Here.
Patty Lindsay.
Here.
And Lauren Holman.
Here.
Glenn, you got me?
Did I say Dominic Sinelli?
I didn't hear you.
I did.
Okay. In the packets were minutes from the January 11th,
Prior
2023.
to approving that, I'd just like to share with everyone, new commissioner from Carteret, which we got notice of, Frank Bellino, who will be standing in for Carteret. So,
Thank you. I'm sorry. Welcome aboard, Frank.
Thank you.
If, yeah, you can thank Mike, too, Mike Sika.
Hello.
He probably had a good chuckle at you. Okay, so in your packets were the minutes from the January 11th, 2023 meeting. Looking for a motion and a second to approve unless there are any comments.
I move.
Motion, Joe.
Second, Michael.
Frank Bellino.
Yes.
Bellino,
Yes.
Mayor Heck, Joe Zanga,
Yes.
Harry Delgado,
Yes.
Ricardo Lanos,
Yes.
Mike Drulis,
Yes.
Jeanette Larison.
Yes. Next is the administrator's report.
Yes, Chair, in the packets that were distributed for the month of May, breakdown of the loss histories for the JIF, where I'll hit the highlights of the 23 and 22 years. Auto physical damage claims reported 52,723. 22 was 51,666. Auto liability claims of 2,250, and in 2022, 46,796. General liability, we're at 101,350 in 23, and in 22, 584,726. Property claims to date in 23 of 28,732, and in 2022, 160,444. On a workers' comp, in 23, we're at 114,094, and in 2022, 1,823,692. The report will break it down further by additional fund years. With respects to the status of the deficit collections, we did receive the 25% payment from Carteret Redevelopment, Carteret Housing. Additional billings went out to all members with respects to the amounts due. They went out the end of April, so we'll present another round out end of May, and keeping the towns on notice with respects to what's due. Also included in the reports are the April claim payments for your review. On the QualCare workers' comp system, all claims paid for the month of April, 161,063. 11 claims relating to prior years. This is what we're tracking against the deficit collection 2020 and prior, 73,304.52. General claims 408, 303.74, and claims relating to 2020 and prior of 348,781. I've also included a copy, and I attended the meeting of the MEL, had a special meeting with respects to addressing their deficit resolution. I provided a copy in the packets. The MEL issued a supplemental assessment for years 2020 and 2021. In 2020, they are assessing their members $6,700,000. In 2021, 9,300,000. As you're aware, we were in the MEL in 2021. The JIF share of the 2021 assessment is $5,025.
Okay.
Also, hold on, this might be Joe coming. Is that you, Joe?
Yes.
Yeah, also in the packets are the claim reports for the month of April. All claims on this currently open. New for the month of April, claims we've closed off the system, as well as claims we're pursuing third-party recoveries on, as well as subrogations to date on the general.
You hear me, Glenn?
Yes. Subrogations to date of 8,136,125, and on the comp system 4,685,947.
Hey, thank you. Any questions or comments on any of that information? Managed care.
Thank you, Chair. Healthcare savings reports for the month of April, we had 150 bills received. 95% of them were in network. Total charges for those bills was $279,247.60. They were repriced to approve for payment of $72,615.72. It's a savings of 74% from charges. There were 14 injuries reported and 12 required treatment. If there are questions on the rest of the report, I'll be happy to answer. Otherwise, that concludes my report for today.
Thank you. Does anybody have any questions or comments for Donna for the report?
Thank you.
Thank you. Okay, moving on to the finance report.
Good afternoon. Sorry I'm late. I was driving on the highway. I'm at the Philadelphia airport. I sent my report out last night. There were no changes in the assessment receivables. We didn't receive any 2023 assessment payments in the month since the last meeting. The budget trial balance speaks for itself. It includes today's bill list checks plus all the claims since the beginning of the year. Scott, are you on this call?
Yes.
Okay, so I got your email this morning, and I'll answer those questions in an email. I really don't have the time to do that with you today. I'm going on vacation tomorrow for a couple of weeks.
No, nothing is critical. Just so commissioners know, I just asked Joe some questions about the his report, just trying to understand things a little better, but nothing is critical. So we can wait for his availability.
And the difference is for commissioners, I've said this before since the beginning of the year, and since I started accounting for the prior year, prior to 2023 current year claims differently, basically the way that HFA is asking me to do it, that since there's now a claims line for every year and every coverage line where there was a payment. So if you see a negative number, that just means that we made payments this year against that claim year and against that claim line. That's the overall answer to your question, Scott, but I'll get into some of the specifics when I address your email tonight.
Thank you.
You're welcome. And
Any questions?
that concludes my report.
Thank you, Joe. Anybody have any other questions or comments regarding the finance report?
No.
Okay, moving on to safety and loss. I guess Mr. Gotay isn't here.
Mr. Gotay is not here. He did submit a report which was included in the packet. If you'd like, Chair, I'll hit the summaries of it. Training conducted in the last month. New Brunswick had PPE, bloodborne pathogen, and HAZCOM, Carteret, lockout, tagout, and forklift safety, chainsaw, and PPE, and Milltown, I'm sorry, had lockout, tagout. They currently have scheduled confined space in New Brunswick, HAZCOM, and GS in Carteret. From what I understand, he completed the surveys, right to know surveys for South River, Milltown. And they have been submitted. He's got the final meeting scheduled in New Brunswick and New Brunswick Parking Authority. 2 additional safety bulletins were in the packets, working with chainsaws and motor vehicle safety.
Okay, thank you. Old business.
Yes, Chair, distributed last week was a draft of the 2021 audit, which was distributed to all members. I have Lauren and Patty from HFA here. We submitted a couple adjustments, and I understand Mr. Cant had a couple adjustments, but I'll ask Ms. Holman if she would like to address the board and give them a brief synopsis on the status of completion and what their findings were.
Sure. Hi, good afternoon, everybody. Thanks, Glenn. I don't know how you guys want to do. If you want, I can share my screen and pull some things up. Is that best? Is
That'd be
that
great.
would work.
That'd be
Thank you.
great. Mhm.
Okay, great. Oh, you disabled participant screen sharing. Can you allow me to share? I'm just building suspense.
If you make her like a presenter or a alternate host, she should have the same. I don't know if you can do that in real time.
You're gonna be the host, so
Okay.
you're gonna have to switch it back to me when you're done.
For a small fee, Glenn, I will. Okay. Okay, can everybody see your financial statements?
Yes.
Okay, great. Okay, so you're going to be in a very small screen down below where I'm looking. So if anybody has any questions, please feel free to interrupt me as I go because I'll be looking at other screens explaining what I'm talking about. So please, don't consider yourself rude, just yell away and I will stop and explain anything further that we can. Patty Lindsley is also on the line with me today. So between the two of us, we should be able to get anything that you need. So this is comparative statements for 21 and 2020. We'll take you down to the auditor's opinion, which starts here. So it is an unmodified opinion. That means this audit is done in accordance with generally accepted accounting principles and with the methods prescribed by government auditing standards and the New Jersey Department of Banking and Insurance, Division of Local Government Services, Department of Community Affairs. So you have quite a few regulations that you need to follow with how these financial statements are presented. And we do feel that these financial statements are presented in accordance with all of those prescribed standards. On the next page, we talk about prior period financial statements. We're only giving an opinion on 2021. We state here that 2020 was audited by other auditors who expressed a qualified opinion over those financial statements. And they qualified their opinion because of the actuary calculations. The other thing I want to draw your attention to, and I'll make this a little bigger, that will be different in this audit report versus prior years, is in this supplementary information. So that's all of the schedules behind the footnotes. Normally in audit opinions, we do give some sort of limited assurance over those. We don't audit them, but obviously they're subjected to audit procedures, and in a normal course of an audit, an auditor will provide limited assurance. Right here, we state that we were unable to apply limited audit procedures, really truly due to the lack of cooperation from the prior auditing firm to allow us to look at prior audit work papers to gain comfort with the prior schedules. And so therefore, we do not provide an opinion or any limited assurance on those back schedules. So I just want to draw that to your attention as well. Our next opinion, because you are a governmental entity, you are also required to get your audit performed in accordance with government auditing standards, otherwise sometimes known as a yellow book opinion. So here we take a look at your internal controls and on compliance. And here we don't give an opinion, we just report if we have any findings. So here you can see, and again, I'll make this a little bigger. In internal controls, we do have material weaknesses as comments 1, 3, 4, 5, and 7. And then comment 6, we're considering a significant deficiency within internal controls. We'll go over the comments in just a minute. And then over in compliance, we also, these aren't additional comments, these are the same comments, and they could qualify as internal control or compliance or both. So in this instance, comments 1, 3, 4, 5, and 7 are also considered compliance comments. So we'll go over that in a second. Okay. We get into management discussion and analysis. Again, if you want a brief understanding, a high level from management's perspective of how the fund did, I direct your attention there. I'm going to take you to Exhibit A. I'll make it bigger. Okay. So this is your combined statement of net position, otherwise truly known as your balance sheet. And here I'm just going to again give you some high level year-over-year comparisons of how the fund did for the year. So at the end of 2021, it ended with total assets and deferred outflows of resources of $7,051,187 versus $7.98 million in the prior year. It's a decrease of a little under $1 million of about $930,000. Couple things that have very large variances right here, cash and cash equivalents. You can see it went from almost 5.3 million down to $300,000. It is a jump of 4.996 million. You'll see that the fund did operate at a surplus in the current year. However, we have these very large receivables down here. And it really just from a cash flow perspective, it affected the actual physical cash that is sitting in our bank account, which is why you see the decrease right there. And again, remember, this balance sheet is a snapshot in time as of 12/31/21. We are now 5/24/23. So your balance sheet position may change or will have changed.
Lauren, I just want to bring to their attention also that 5.2 million in the prior year included investments. So those investments were moved to the operating account and utilized for current year operations. So there's about $26,000 left in, well, at 12/31/21 in the investment accounts, and that is buried in that 300,000.
Thanks, Patty. So that was a decrease, and the increase that you're going to see is right here in a supplemental assessment receivable. Last year was 356,000. You see it's 2.4 million. And that is the 2020 to 2021 assessment that was assigned out in the current year. So you see that as an outstanding receivable. And then our excess claim receivable also had an increase of about 1.8 million year over year. Down in our liabilities, I'll just go to the obvious first. You see all of these have balances last year and they don't have balances in the current year. We really worked with management because we really didn't have prior audit work papers to go off of. If management really couldn't substantiate the balances, or it was something of, hey, it's been on our books for a really long time, we don't know if this is really truly due and payable. And in our world, if something is not really paid out in 90, 180 days, then it's kind of like, hey, is this truly an actual payable? So we really scrubbed and cleaned the balance sheet. And all of these payables were written off in the current year due to just lack of support, and overall we didn't feel that they could be substantiated in true payables on our books. Some other highlights here, our IBNR had a decrease of about 3.5 million, and our CRACE reserve had an increase of about $900,000, or a little over 7%. Oops, sorry. Our net position, it was an operating negative deficit position of 25,932,000 versus a negative position of 28 million in the prior year. It's an increase, so it performed better by $2.2 million, or about 8%. And how we get to that is on the next page. This is our statement of revenues, expenses, and changes in net position, usually commonly referred to as an income statement. So here you can see total assessments for 2021 was 14.59 million versus 10.8 million in the prior year. It's an increase of 3.7 million year over year. And our expenditures, we spent 12.7 million versus 16 in the prior year. A large decrease you can see right here year over year is our provision for claims and claims adjustment. That's a decrease of about 4.3 million. That brings us here to an operating income of 1.8 million versus a loss last year of 5.1. We have a little bit of investment income, again, not as large as last year because we didn't have as large of an investment portfolio for the whole year as we did in 2020. That brings us here to a total change in net position of 1,860,000 versus a loss last year of 5 million. It is a swing year over year of about 6.8 million. And then the only other thing I wanted to draw your attention to here, the prior period adjustment of the 375,000. Remember, I told you we wrote off a lot of those payables. That is what this prior period adjustment is. It's just removing them and not affecting your income statement for that removal. Are there any questions here? Okay. A few other things I want to draw your attention to. So in the footnotes, we've got, I'm going to draw your attention to two. Okay, so make this a little bigger. So we do have a footnote that's new this year that you wouldn't have seen last year, and it's just the financial condition of the overall fund. Because you are operating at a deficit net position of 25 million and 28 million in the prior year, we did, as your auditors do, feel that a going concern in your audit opinion is not warranted. But since management does have a plan, however, that plan does need to be disclosed in a footnote because the readers of these financial statements should know what the plan is for the fund and how to get that deficit into a positive net position. So that is what this footnote is stating. So again, that's a new footnote this year versus anything that you've seen in the past.
Lauren, are you saying, Lauren, that the footnote that we should give you a language for you to include in the footnote in this report, or something to be done subsequent to the report being released?
So we worked with management for the wording in this report. Management and Scott have all seen this wording to make sure that we once sought their guidance in some of the wording that's in here, because obviously we don't know what management's plan is until they tell us. So Patty actually sat down with management, learned their plan. We crafted this note, then sent it to Glenn and Scott for their revisions or any corrections that they may have had. But if you have any, this is in draft form. So if you guys have any more revisions to in particular this footnote or really anything else that you see, we are more than happy to include those revisions. Just the next thing I want to point out here is a subsequent event. The fund did have a couple of things that happened subsequent to December 31st, 2021, but prior to the issuance of the audit report, which will be the end of May of 2023. And that is that we were in the mill. We are no longer in the mill. We, at the end of December of 21, we had 16 members, and at the issuance of the audit report, we will have 6. And that the fund is also currently undergoing an agreed upon procedures examination with the Division of Banking and Insurance. Okay, now I'm going to bring you to all the way down. Little light reading for you guys now, this report. Okay, now we're going to talk about the comments and recommendations. Okay. So here's our, so they're all financial statement comments. Our first comment is 2021-01 is just the formal close process, really, and you guys, the board has been made aware of the process throughout. We received one trial balance, and then numerous adjustments were needed to be made in order to have a final trial balance that was able to be audited. We truly believe that that is because there is no formal close process in making sure that the audit documentation then ties back to the final trial balance. So our recommendation is that a formal close process be instituted and implemented so that all year-end work papers provided to the auditor do talk back to the trial balance that's provided. Our next comment, now 2021-02, you'll see it didn't make it into the gas opinion. We do not consider this a material weakness or a significant deficiency. We just think that this will really help in best practices in eliminating the other comments. And it's just a formal documentation of the accounting policies and procedures. So I think a lot of our questions could have been avoided or helped if there was a source document that we could go to with the policies and procedures of how the accounting staff work each entry within the general ledger or within the trial balance, and that just doesn't exist. So again, we always use the analogy of what happens if Glenn and Joe go in together on the mega ball and they win, and then they go to an island and they leave us. You know, could somebody just come in and pick up and do their jobs pretty seamlessly? And right now we have to say probably not, because what they do on a day-to-day basis, especially within the accounting function, isn't well documented. So we are recommending that formal documentation be put in place.
Glenn, I'm at the airport right now. Come on over.
Did you leave and you're not telling us?
I'm at the airport. I'm not saying where I'm going or coming from, but I'm at the airport.
That's fair. 2021-03 is bank reconciliations. The bank reconciliation process is being performed outside of the accounting software. And that provided a few discrepancies when we were trying to take the bank rec and tie it back to the general ledger. The bank reconciliation had checks that were canceled or that were deemed cleared that were never in the general ledger. There were ones that were cleared and then that really didn't clear till after year end. So there was just a lot of miscommunication within that bank reconciliation process that really does need to be tightened up and looked at. If possible, the bank reconciliation process should be performed within the accounting software. If that's not possible, then really maybe some dual signers off that they are certifying to the bank reconciliation and they've reviewed it will help mitigate some of the issues that we've seen this year.
Yeah, so Lauren, I've commented on this before that the fact that the majority of the checks for the two claims payments are generated from a third party, not generated from our accounting system per se, but generated from a third party. I have to have a conversation with QualCare to see if they have the ability to take the checks that are presented every month by the bank and then check them off against their claim runs for that month and then present to me an outstanding check list of, paid versus or presented versus paid. I haven't talked to them about that yet. The admin account is easy. We do 15 checks a month, but it's really the two claim accounts that cause the issue. And one of the other issues is that checks get mailed during the course of the month before they actually get mailed and get cleared by the bank before they actually get onto a check run for Glenn and I to approve the wire transfer. So at the end of any given month, there may be, 5, 10, 15 checks that have been cleared that haven't been recorded yet because we haven't been given the check run from QualCare because the checks are being released early. And that's more, a timing issue with respect to claimants needing payments and QualCare, making those payments and not putting them on a run until maybe 1 or 2 weeks after the fact. But, I have to talk to QualCare about their ability to take the cleared payments from the bank statement and match them up against their run and then present me with their version of what the outstanding checks should be. If that makes sense.
Yes, thanks, Joe.
Yes. Okay, number 4 on our list of findings is related to accounts receivable. What we found in this area was that the supplemental assessments and the excess claims receivable accounts weren't properly recorded in the general ledger. So what we saw when we walked in the door for the trial balances did not support what actually was taking place during the year. So detailed receivable schedules weren't available at the start of the audit. By the end of the audit, they were provided to us. Entailed several journal entries in this area were proposed to management, and they agreed and had to be recorded in the general ledger. So we recommend that the detailed supplemental assessments and the excess claims receivable schedules be maintained to provide even at least on a monthly basis that they would agree to the general ledger detail. And at any time, management should be able to go to the financial statements or the monthly financial statements trial balance and see that they have a detailed schedule of what the receivable balances are, and it agrees to that trial balance. This will mitigate the issue that we had at the end of the year where we walked in the door and the numbers didn't hide any support that we had.
Oops, sorry.
Whoops.
Go ahead, Patty, you want to do this one?
Sure. The next one, number 5, excess insurance recoverables. Receipts for the excess insurance recoverables were recorded in the subrogation account. So instead of being recorded against the various receivables. So an example is we saw $500,000 sitting in subrogation, which is on the profit and loss statement, as opposed to a reduction of a receivable balance. And again, it kind of goes in hand with the receivable comment above. So again, all receipts for the excess insurance recoverable should be recorded against the correct receivable general ledger account. And if that reconciliation process was done with supporting schedules on a monthly basis, that will be alleviated.
Um, 2021-06 is the liability accounts. We said a couple of times when we got to the balance sheet and the income statement with the prior period adjustment, there were several liability accounts that had the same balances as prior years, and those balances had kind of carried forward year to year. Our recommendation is that analysis of each balance sheet account be performed prior to the audit being commenced, and that detailed schedules and support are given. And then if a balance is in there that really can't be substantiated, then it gets written off prior to the audit trial balance being given over. And Patty, would you take this one?
Yeah, the next one, 2021-07 subrogation account. Again, as I was just speaking of, the subrogation account is a profit and loss. It's a revenue account in the general ledger, and that closes out to your operations. Subrogations are being recorded to the year and insurance line of the original expenses. The subrogations were reported as a single revenue line item in the general ledger, not allocated against the various claims years and insurance lines which they pertain to. So management had to analyze each one of the receipts in the subrogation account for us to determine the correct allocation by claim year and insurance line in order to properly allocate the receipts to their correct accounts. And that's how we found that $500,000 misposting. Our recommendation again is the detailed assessment receivable schedule should be maintained, proven out monthly to the balance in the general ledger and available for review at the time of the audit.
Okay, and those are our comments for the current year. And then just to follow up, this is last year's comments. And again, we weren't your auditors last year. However, we do have an obligation to follow up on them. So just the current status of all of your prior year findings. You had a comment on investments. We consider the finding addressed because the fund no longer truly has investments. So that really is a non-starter for us. Revenues and receivables, you had a couple findings. They kind of tailored their findings a little different as far as their headings go. But 2020 -2 is now current year comment 2021-04. So that comment has not been addressed. 2023 is now comment 2021-05 for us. So that comment has not been corrected from the prior audit. 2020-4, we consider the finding addressed and corrected, and that was several excess recoverable receivables were recorded in the actuary report, and they were kind of duplicated. We did not find that error in the current year. 2020-5, we considered that finding to not be corrected, and it's now 2021-06. And then 2020-6 for a prior year audit comment is now, we also find that that finding has not been corrected, and for us, that comment is 2021-07. And that's your comments.
Hey, Lauren, if I could just ask one question on your finding 2105 on, and this recently just happened with respects to the monthly posting of excess receivables. And we had an open receivable of, let's say, 46,000 on a claim. And then when it was presented and collected, we collected more than the 46,000. We collected, say, 120,000. So should there be an adjustment for the additional receivable and then a credit for what came in, just so I'm sure how to handle that?
Patty, Patty, I didn't know if
Yeah.
you want to.
Yeah, sorry, Glenn. Yes, I would say the $46,000 should be relieved against the receivable that was existing, and then the difference between what you received, the 120 less the 46,000, should be brought into income in the current year. It was not anticipated that you were going to collect anything more than the 46,000, and you'd have to bring that into the current year.
Yeah, but I don't do anything to the 46,000, correct?
Well, you have to
You relieve it.
Sorry.
Yes, you relieve it. Yeah,
Well,
you relieve it.
we satisfy it. We satisfy the
Yes.
receivable with the 46,000, and the balance becomes income in that year.
Okay.
Are
And
there
if that related to an old year, Glenn, I'm sorry, Lauren, if that related to an old year, Glenn, you'd post that revenue back to the old year. So it
Correct.
would go in the general ledger in the year it relates to.
Correct.
Right, which is kind of what you're seeing, to go back to Scott's question, when you see that new budget trial balance I'm providing, if there are the subrogation payments that we get or the excess payments that we get that relate to a year and a claim and a coverage line, those are being posted there individually now as we get them, as opposed to the one, income subrogation. So now they're being posted in accordance with the way HFA wants it. And to Glenn's point, that difference is going to get posted against the year in which that claim and receivable originated.
Correct.
anyone have any other questions we can answer?
I have one question, Madam Chairwoman. Addressed to Glenn and Joe. Is there any of the recommendations that were made that the two of you believe we cannot comply with, or can we comply with all the recommendations?
We can and will comply. We can and will comply with all of them.
Yeah.
I'll speak for Glenn.
Okay.
Some of them we already have. Some of them we didn't, because it wasn't a finding from the prior auditor. So the processes that we went through for the 21 year were the same we went through for the 20 year. Wasn't a comment from the auditor for the 20 year. We didn't see the need to have something fixed that wasn't commented on it. And then now that HFA has commented on it, because they don't think that the way we're doing it is proper, and I tend to agree with them, it'll be adjusted for the 22 audit. It's already been adjusted for the 23 fund year, but I'll have to go back before I present them, if they're the ones who get awarded the contract, before I present the next auditors, a set of financials for them to audit for 22, the manner in which they're presented will conform to the manner in which the audit would like them to be presented.
And as I understand it, the revision to the 2016 is included in this audit?
It is, yes.
Yes,
Okay, and but the allocation for 2021 for this audit to the members of 2021 by line of coverage is not done in the audit, but it's going to be done by internally by us. Is that correct?
Yes.
Correct. Yeah, well,
Okay.
what happens, Leon, is we'll take, and it goes to the back schedules, which details basically each fund year by line of coverage, what the position of that fund balance is by coverage by fund year. And that will be transposed into a new spreadsheet for purposes of the deficit.
Okay. Thank you.
So now where do we go from here? Will this just become the final document or?
Yeah, I believe I had spoken with Patty earlier. They just need a motion to accept the draft. And I'd like to, once I get the final from her, we'll have a special meeting and formally adopt the formal audit, finished product.
Glenn, and obviously the attorneys in the room can correct me. If we're not making any changes to the numbers, or really anything of this. So if you wanted to adopt this one, so you don't have to bother the commissioners with a special meeting. A lot of times we just present and draft in case anybody has this word's not the right word or you need a period here. But the numbers will not change. So if you wanted to adopt this to save the commissioners from another meeting, we have seen that done with other funds.
Madam Chairwoman, in response to your question, yes, there was a prior draft that's been circulated now for at least a month. This draft is consistent with that, but it has all of the attachments and everyone's had it for at least a week. If all the members believe they've had sufficient time to review it with their consultants and are satisfied with the draft, I have no problem with a motion to accept at this meeting rather than waiting. But if anybody wants more time to review it before they vote to accept, then I think that more time has to be provided. But not an extended period of time. I would not recommend more than 1 or 2 weeks, but if everyone's satisfied now, I think we can proceed.
Okay. So does anyone require additional time before they would like to vote to approve this?
Madam Chair, just a question. This is Michael. A great job, everyone. Great job to the team. This was a lot of work. I'm glad to see we're getting closer to having our audits all caught up. I'd just like to know from Glenn and Joe, just very clear, are you comfortable with this report as it's been presented? Is there anything else we as commissioners should think about from your perspectives before we vote?
I am, yes.
Yes, Mike, we have the last month, we've been going back and forth with Lauren and Patty and their team with respects to identifying certain things and making sure everything was correct to my satisfaction and Joe's satisfaction. We did agree with their comments, and I did put in the packet a response to her governance letter, which addresses the comments section of the audit and what we plan to do about it to correct those. But I'm comfortable with the numbers. They seem to fall in line with where I thought we would be at. It has already been shared with Mr. Walsh, who's on the phone, but I don't know if he's gonna be willing to comment, but he did suggest things during the last month and a half as to certain suggestions which were taken into consideration, so.
Yeah, this is Sean. I have no further comments on it. Thank you, Lauren, Patty, and the HFA team.
You're welcome. Thank you.
Okay, with all of that said, then I guess I'd be looking for a motion and a second to accept the audit.
Motion, Michael.
I second Harry.
Frank Bellino.
Yes.
Mayor, Joe Zanga,
Yes.
Harry Delgado,
Yes.
Ricardo Lanos,
Yes.
Michael Drulis,
Yes.
Jeanette Larison.
Yes. Okay, so
Glenn,
I
for the
guess,
record, will you announce the
Lauren,
vote?
before you sign off, give me back the host position. I don't know if you did or not.
I didn't, 1 second.
Glenn,
That would be
I'm gonna
awesome.
sign off. My pickup at the airport is here. So,
Okay.
good timing.
Safe travels.
Tough life, Joe.
I-
Get through it.
No, I'm not traveling till Friday. I'm picking up somebody at the airport, but thank you anyhow. All right, take care. Bye-bye. Thank you,
Glenn,
Lauren. Thank you, Patty.
Glenn, for the
You're
record, would you announce the vote, what the vote was?
Yeah, the audit passed with a vote of 1, 2, 3, 4, 5, 6 yes, and 1 absent.
Absent or abstention?
Mayor Heck absent.
Okay.
okay, great. Thank you again for all your hard work, and I know that I'm assuming with new business, Glenn, we'll be talking about the appointment.
Yes.
Okay.
All right. Thanks so much, Glenn. You should be host now.
Thank you.
All right. Have a great afternoon.
You too.
Bye-bye.
Chair, with Mike Sika's resignation, you are short 1 secretary.
Right. So I guess we need nominations for that position. Which I hear crickets. Everybody's so quiet. Not one person wants to, I mean, I can volunteer somebody.
I'll volunteer.
Excellent. Thank you. I nominate Frank Bellino.
Second, Michael.
Thank you.
Thank you.
So that was Frank. And it was seconded by,
I made the motion and Michael Drulis made the second.
Frank Bellino,
You can vote for yourself, yes.
Yes.
Joe Zanga,
Yes.
Harry Delgado,
Absolutely. Thank you.
Ricardo Lanos,
Yes.
Michael Drulis,
If Frank's in a giving mood, we can do a couple other positions while we're here. So yes.
and Jeanette Larison.
Yes. Okay, other new business, Glenn.
Yes, Chair, I provided everyone with a Dropbox with respects to the RFQs that were received for positions for the 2023 year. As you're aware, Holman Frenier was rebid and they did submit a proposal for 2023. I have shared them with everyone, have not received any word back, and I do not believe, unfortunately, Scott was away. I haven't received any further comment from him with respects to those or moving forward. So if you want to call a special meeting with respect to the professional appointments for 2023, perhaps next week, just to handle that, we could do that. So,
Scott?
Is that necessary?
The only, excuse me, Chair.
Oh, poor Scott.
There's only one or two positions where there's any competition. The actuary, the auditor, the whole defense counsel list, can all be approved as is. And coverage counsel, I think we're the only ones who submitted for that. Then I have to double check. There was somebody from South Jersey that submitted for, I think, general counsel and run out counsel. So those would have to be analyzed in some way so that you have something to review and vote on.
But the ones that we have only a single applicant can be voted on today, right?
As well as all the applications for the defense panel, because those are not unique. All are qualified and almost all have provided services to the fund in the past. And I feel much better than I sound, by the way.
Okay, yeah, you sound terrible.
What are the rates though compared to the prior year for some of these that only are single presentees? You have the rates from the prior year, Glenn?
The
From the attorneys and the auditor and everything?
with respect
the auditor,
to
the auditor is-
auditor, she came in, she came in higher than her original proposal for the 2021 audit. However, she did request a revision for the additional work in her audit. Her number proposed for 2022 audit would be 57,000. The actuary is remaining the same. I believe Mr. Monzo went up 2,000 to 24,000. All the defense counsel are holding the rate at what the JIF proposes of $175 an hour, I believe. Correct, Scott?
Yes.
Yeah, I think you got to look at the fee for the audit too. I mean, that's significant in my mind. What was the proposal the prior year for the fee?
Their original proposal was 24,000.
Okay. I mean, it should be less heavy lifting this year after what they went through last year, right?
I would certainly hope so. Even though they did ask for a higher amount to complete the 2021 audit due to the additional work involved. But if you want more time to review what this audit entails,
Yeah, I've seen that on the bill list. It's almost double what they proposed. I know, and then this one's even 12,000 higher than what's on the bill list. So I mean, it should. Year one of any audit is always a lot more work. It should get easier, I would think, going forward. But then the price is going up 12,000 going forward. So something I think we have to look at that.
Well,
I can do an analysis and do a memo for the commissioners on that.
and I just want to just make, put this out there too, Joe. Although I do agree with what you're saying, the first time around we got 0 applicants, including Holman, who did not want to submit. And so we would have no auditor. And, we put it back out there. We had a conversation with them and they didn't want to resubmit because of the workload and, so we said, put a number on it. And so I just want to put that out there that it's not like we have a whole lot of wiggle room until this thing is fully cleaned up. I think that doing 2022s is going to be probably a struggle too. Not like 2021s, but I think that they're going to encounter some, because some of these
Right.
things were not corrected until,
I'm not saying don't appoint them. I just think the price is high. That's why I think I was going to ask the same question Mike Drulist asked. If Joe and Glenn are comfortable with these numbers right now, and the recommendations all have comments on that, we're going to solve everything. This shouldn't be that difficult. A lot of heavy lifting going forward. So I mean, that's just my 2 cents. Yeah,
No.
I'm 1 vote out of 6. So
No, I understand, and I want you to feel comfortable with it, but that was 2021's audit, you know?
I understand.
So,
Yep, I understand. It went from 22 to 45. Now it's going to 57. So I know there's a lot of heavy lifting, but they know, auditors know what they're getting into when they get into it, when they submit a proposal, you know?
no,
So
I know,
57,
and that's
if
why
something
they
goes
didn't put in. That's why they didn't put
correct.
in.
And listen, I know when no one submitted that, there's a lot of people out there that don't want to do the audit anymore in certain
Yeah,
places. So, but my
right.
point being is if it's 22 and they should be correct, we still have time to correct 22. You can go back and still correct 22's numbers before they audit it. So hopefully that 22's doesn't have as many recommendations as 21. But I just think it should be, everything was already done in year one. Year two should get a little bit better, I would think.
I agree.
Almost going closer to where it was, you know? But honestly, on one vote, if
Yeah.
everyone else is comfortable with it, then put it up for a
You know,
roll call if you want.
I want to add just something to Joe's thinking because I don't want his points to be lost. I think that if they probably didn't make any money the first go around, they may have lost money doing this audit. And if they're coming into second year anticipating that could happen again, I understand. But I would also say that, you know, my thinking is this better not be a trend. In other words, if they expect this next audit to be heavy and costly, that may be the case. But to Joe's point, you know, as we look to future RFP processes, I don't know that they can just, I don't know anyone could say when you're at that high number, hey, we're just going to take a cost of living increase, so to speak.
Oh, yeah.
So
No,
we'll do a due diligence again when we hope that the 22 audit comes in with a lot less work. And of course, 2023 will be so flush with cash, it'll be easy.
Well, I would say to my point is that I personally don't have a problem paying them the money this time because I do think that I've gone through this myself. So I think that this year, well, when they do 2022's audit, it's not going to be anything like 2021, but it's still going to be a heavier workload. But then when it gets to 2023's audit, should they put in again, I would expect the number to go down, not stay the same, but I think it is a 2-year process. And I think that there are still some things that still aren't corrected, as you heard Joe Monzo say, yeah, I got to do this, I got to do that. So I still think that there's going to be problems. So I personally don't have a problem paying them the money this year. If it was for next year, that would be a completely different story, but that's just my opinion. I do agree with Joe. I think it's going to be easier, but I still think it's going to be a challenge.
And my last thing is, Scott, you said most of the attorneys are the same? Because I don't have the prior year's hourly rates, but majority of them that you reviewed from the current rates are still level?
Yes, all of the defense counsel are the same because that was in the RFQ.
Okay, yeah, I thought we had a level of what they can apply for. Okay.
Yeah.
That's what I wanted to make sure too, because I don't know what they were prior. I only see the current ones that were submitted, you know, so I don't know what they were billing prior. Okay.
All right, so this is where I'm at. So which I should have asked Lauren this, but I guess because I'd rather approve at least the auditor. Well, I don't have a problem with anybody's except for the ones that seem to be, you know, really comes down to a choice, but all the single entries, I would personally feel comfortable doing that, and especially with the audit to say, okay, and then when would they be beginning the 2022 audit? You know, did we get any?
I had a brief conversation with Patty on that. They you know, expect to be able to get started on that probably mid-July. They're wrapping up their school boards right now. So you know, but they did say the process will be significantly less. I know we hired them in August of last year.
Right.
But you're right. I'd at least like to get the actuary on board, the auditor on board.
Yeah, so that we can get this moving so that we can get back into you know, an appropriate timeline for these documents to be completed. So do we need to do single motions, or how do we appoint these professionals?
You could do it. Well, Joe's number was 24,000. Amy Peters at the actuary came in the same. She was a single bidder. The Defense Council, we had submissions by about, I think it was 15 different attorney groups. I don't know if everybody had a chance to review them or not.
Are they the same people that we normally appoint, that we've appointed year over year?
There are probably 10 of them are the same, and we got 5 additional new ones that submitted qualifications.
Do we have a
but
limited number that we appoint or right? So it doesn't matter, right? You
There's
just,
no, there's no.
the bigger the
limit,
pool, probably
yeah.
the better off we are.
So,
And Glenn has the ability, or Glenn and Tom, to parcel out work. And they can send smaller matters to new council
Mhm.
to see how they do. And
Sure.
obviously the heavy matters will still go with the attorneys that we've been using for the bigger matters.
Okay.
And to answer your question, Madam Chairwoman, I have no problem with having a single vote on a package. But unless a member asks that one or more of the RFQs in the package be separated for an individual vote.
Okay.
No, I'm not gonna ask to separate, so you can put them all together. I'm just gonna, you put a little caveat on it that I think the audit fee is too high, but they are the only respondee, so we have to go with them. But I think the fee should be a little bit lower, but you can put them all together and I'm probably gonna vote yes on everybody.
Okay, thank you. So I guess the resolution would be to appoint the actuary, the auditor, the defense counsel. Who am I missing? Because I'm trying to look for it in front of me,
The
but
CFO,
CFO.
a coverage counsel,
Coverage Council.
I think it's everyone but the general counsel,
and run out counsel.
Okay,
run out counsel.
so
And managed care, we did get 2 proposals in, Qual Care and Innovative Claim Strategies. Like I said, I did a review of the 2 networks. Qual Care has a superior network, I believe, to Innovative Claim Strategies. So even though Innovative Claim Strategies number came in slightly less, I believe the cost sacrifice on the repricing of the claims would be significant.
okay. So we'd be looking to approve or appoint everyone except for general counsel and run out counsel then.
Correct.
Okay. Does anybody have any questions, concerns? Did you not look at the package, the Dropbox? Anything that can be answered before we, entertain a I can't even think at this point. A motion. Okay. Do I have a motion to appoint the professionals?
I'll move it.
Second?
Second.
Frank Polino,
Yes.
Joe Zanga,
Yes, but like I said before, I think the fee is a little high for the auditor. I think we should look at that going forward. But yes,
Harry. Thank you, Joe. Harry Delgado,
Yes.
Ricardo Lanos,
Yes.
Mike Drulis,
Yes.
and Jeanette Larison.
Yes. Okay. Was there any other new business?
Not, just, for everybody's advice, knowledge, even though we got that special assessment, with respects to the Mel, I was also handed a notice of a special assessment. The residual claim fund is also issuing. We were not a participant in it, but, it seems like, the claims are hitting everybody hard, just to let you know, it's
Okay.
not only us.
Thank you. I just have one, so then I can expect to see a resolution for the appointment and for Frank's appointment as secretary and then one for the
Yes.
professional appointments, right? Okay.
Right, one for Frank will be separate.
Yes.
So,
Yep.
and then, okay, yes.
Okay, great. Okay, if there's no other new business, then audience comments? Is anybody from the audience?
Yeah,
Wish to
Charlie
speak?
Cradaville. You hear me?
Yes, Charlie.
Good afternoon, Commissioners. Charlie
Hello
Cradaville,
there.
New Brunswick today. I wanted to start by asking if anybody can tell me why the prior auditor is not cooperating or did not cooperate.
Basically, Charlie, there was a lot of communication going back and forth between, HFA and, the prior auditor, and, apparently HFA could not get to a certain comfort level with the data they were receiving from them, so.
Okay. Is it fair to say that they did not cooperate, or did they cooperate, but the new auditor just wasn't satisfied with their records?
I would say they did not cooperate to HFA's satisfaction, you know.
Glenn,
they
I
were-
think that, wasn't this discussed, didn't the auditors discuss this in prior meetings? I think I don't know that you could characterize what they said, but I'm sure Mr. Cradaville will had the time to look at previous meetings and collect his information there.
Correct.
I think a fair discussion is that they ultimately provided what our new auditor needed. It just took more time than we would have liked.
Okay. Well, yeah, my concern stems from the fact that the prior auditor for the JIF is the current auditor for the city of New Brunswick, and I'm just trying to get to the bottom of why they are sort of, not forthcoming about this matter. I know that I've reached out for a comment and did not get a comment.
Well, Charlie, we can't speak for them, but they did provide the information that was necessary to do the proper audit for this year. I don't know what internal issues they had in terms of gathering the information, but they did cooperate ultimately to give us what we needed.
Okay. Well, and just following up on the audit, it would seem that some of the things that were identified as problems in the audit that was just approved today, would it be fair to say those were things that the prior auditor missed?
We don't have enough information. Nobody here, I think, is expert enough. And I think our auditor, the auditor's comments speak for themselves, whether they missed or not, or just was the difference between record keeping and how they would want the record keeping to occur is a different issue. But I would not want to characterize anything that would unfairly criticize the prior auditor with having more information.
Okay, I appreciate that, and I guess I'll rely on the comments from the auditor today. And did just have a couple of additional questions, so I wanted to ask if there was any update on the matter involving the New Brunswick councilman.
I'm aware of no change.
Thanks. And I also am curious about a claim that I guess someone, or maybe the city of New Brunswick, has brought listed as reported within the past month, copyright infringement. Can anybody give me any insight into what that claim is? Who's allegedly infringing on what copyright?
You'd have to give me either a data loss or a claimant, Charlie, and if you want to send me an email, I'll try and look it up for you. And
Okay.
I don't know where it's at. But...
I'll follow up. It should be in the claims reported for the report under GRMA Claims Management Systems 30479-01. But I'll follow up with Mr. Kurtz via email. And yeah, thank you for hearing me out and answering my questions.
Thank you, Charlie. Anyone else? Okay, so next we have the bill list. In the packet
List, yeah.
was provided a list of bills to be paid for the month. Do we have a motion?
A motion on the bill list, but I'd like to remove 3 items. To table those 3 items, I'm still waiting for a little more information on those items as per last meeting. So if I may, the motion is to approve the bill list and remove, with the exception of salaries, governmental risk management associates, and GRM.
Do I have a second for that motion?
I second.
Frank Polino,
Yes.
Joe Zanga,
Yes.
Harry Delgado,
Yes.
Ricardo Lanos,
Yes.
Mike Julis,
Yes.
and Jeanette Larison.
Yes. Next, I need a motion to go into closed session.
I'll move it.
Or-
Is that Harry?
Yep.
Second,
Second, Michael.
Frank Polino,
Yes.
Joe Zanga,
Yes.
Harry Delgado,
Yes.
Ricardo Lanos,
Yes.
Mike Julis,
Yes.
Jeanette Larison.
Yes.